I found that most traders find it really hard to consistently take out profits from the market. They chase entries, they FOMO in, and sometimes they even buy the top of coins, they buy the top of rotations and metas. Well, for me, it's very different. I take out about 3K every single day from the crypto trenches. And that's because I treat it like a professional. My entries are executed, I plan them out, and I've been doing this for a long, long time. I have a perfect process. So in this video, I'm going to show you exactly what that process is. Not necessarily the coins that I buy, but the actual system behind it so that you can implement it as well. So let's get right into it. How I steal 3K a day in the crypto trenches. Contents, my edge, how I operate in the trenches. Pre-trade structure, thesis, and validation and execution. So we're going to be going through exactly what my pre-trade and structure is, what my theses are, what my invalidations are for my trades, and my execution as well. So how I execute. Rotations and reality. Every coin burns. In the trenches, metas are fast. Liquidity is fragmented. You guys will be aware of this. This isn't the same market as it was in 2017 or the bull market of 2021. It's changed a lot. So you have to be aware of this and take this into account when you're trading. Protecting profits, re-entries, and asymmetry. My mental model for how I protect the money that I've made so I don't gamble it away, and how I actually manage my re-entries. Psychological traps. I mean, this is one of the biggest deaths of traders. You need to know how to manage your psychology, desk discipline, and the traps that most traders fall into, and how I don't fall into them. We're going to get into that today. And of course, a summary. So let's start with my edge, how I operate in the trenches. Well, first thing is that information flow is everything. So I've made sure I'm in the right alpha groups. We throw ideas around, we check each other's thinking, and we move faster than the rest of the market. These groups keep me sharp and plugged in. Alpha always flows down chain, and my job is to stay closest to the source. This is so true, and this is why it's number one, guys. Because most people assume that you can trench in crypto and you can just make money by yourself. And if you're incredibly smart and if you have a lot of market experience, you can. But I'm telling you, the easiest way to shortcut everything is to get into the right groups, be around the right people, be around like-minded people like yourself who are searching for coins, who are smart, and they'll actually help you in telling you whether a coin that you like is good or not. They'll help you catch new rotations. They're just going to help you in general with your trading. And trading's changed, guys. Like, it doesn't just have to be technicals anymore. What I've found is the best traders I know, they use informational flow to their advantage and they execute better than everyone else. These are the most important things. So this is the key to trenching. Once I see a good call or coin from my group, I filter it through my pattern recognition ability to see if it's good or not. So let's say that I see that it's base season for whatever reason. I see a coin's been called in my group. And I'll see it, and it's been called by a guy I really respect. I will look into that group, that coin, and from my pattern recognition, I'll see what the team is. So maybe it's a team that has connections with Google. They're really well connected. The coin just launched, and I think it's going to get a lot of traction. That's the kind of coin that I want to buy. Okay? Maybe on another day it's a coin that I don't like, and then I won't buy it. So it's all about pattern recognition and understanding that it's so important to have this informational flow. So I'll look at if I have legs or not. If I like it, I'll buy it. If not, not. Ride the market, don't fight it. I don't fade momentum, I ride with it. Crypto moves in rotations, so you need to make sure you catch every single one. One week it's Binance season, the other week it's the Sol platform. Another week it's abstract season. It's constant. My focus is to identify where that liquidity is rotating and ride that wave until exhaustion. That's my focus. Crypto no longer pumps all together. We know this now. It pumps in fragments. You have cycles of fragmentation. You need to be able to catch each one. The more people you have around you, the easier it is going to be to find that next meta, okay? Track the flows. I watch net flows across different systems, so I can see where liquidity is being moved to in real time. This is one of the only leading indicators that we actually have in crypto. When I see money move into a new ecosystem, I know that an ecosystem, a season of that ecosystem is likely to happen there. This one thing usually gives me about a day's head start on new metas. Understanding the PvP nature. So even within hot rotations, the game is still always PvP and extraction. I talk about this in every single video. Every win is someone else's loss, which is why I really manage my risk carefully. I size in appropriately. I don't put too much money in. And also, you have to be aware of the liquidity of the coin. A lot of the coins I'm buying, I couldn't just buy 100k of that coin because the coin's far too small. You'd be appropriate. You put 5k in, okay? You put less in. I manage my invalidations tightly and protect my backside before even thinking about upside. This is the concept of asymmetry I always tell you guys about. I buy in and I limit my downside, but I try and increase my upside. And this is key for crypto. Price action is my tool. Everything I do is built on price action. I learned from a London prop trader. So reading structure is second nature to me. I've been doing this for 6 years now. His name's Tom Dante. He's a very, very good trader. I applied his methodologies and applied them to crypto. I can tell when buys are trapped. I can tell where liquidity's sitting, when a move's running out of steam, when price action breaks my expectations. I'm out instantly. So price action is my tool, and you guys should definitely use price action as well. You should learn it if you haven't already. Tools as leverage. I use sniper bots, trading terminals to enter and exit and manage my positions. I never use decentralized exchanges like Jupiter or Uniswap. So you guys should be doing the same. If I'm buying things on Binance Smart Chain, I will use GMGN or I will use BaseBot because I can get in and get out instantly. I can manage my positions. I can't do this if I use PancakeSwap, guys, or SushiSwap or one of these other dexes. I only use dexes for really large transactions if I'm buying a coin and it's not really time sensitive, okay? I automate my entries and set limit orders in order to take profits when I'm away. This is something most people don't do. If I buy in a coin, I will set my limit order straight away in case the coin spikes and then I get out. This actually happened to a good friend of mine the other day. A good friend of mine bought a coin on Abstract and he put a limit order in for 10x, never expecting it to get hit. I think he put 2k into this coin. That coin spiked into his limit order while he was playing tennis, funnily enough. Took out 20 grand, and then it spiked back down. So there's a lesson in there. Place limit orders, even if you think they won't get hit, because they might get hit. Okay? So I use these tools to execute for me while others don't. And the last thing is that this is full-time work, guys. It's work. Like, I treat trading and trenching as a profession. I trade on the side as well, so I'll trade Bitcoin, Solana, and Ethereum traditionally like I'm taught. Trenching is a little bit different. Honestly, I do it for fun. Like 3k a day is just a bit of fun for me. Obviously, it's good money, but I enjoy it as well. But I'm glued to my desk, guys. Like, scanning charts, I'm checking Telegram every single day. You can't casually take money out of the market. You can't casually take money from me, okay? Because if you're not willing to outwork me or you're not better than me, then you're going to end up being at liquidity. There's no free money in the world. You have to work for it, okay? And like I said, I track the flows as well. So I track the flows and I see where the money is moving to. And this is the flows here. Pre-trade structure, thesis, invalidation, execution. So you have to predefine your invalidation. Every single trade begins with an expectation. Before I enter, I know what a good setup looks like. A structural break, price looking bearish and bad, or a failed reclaim. So if I see this in my invalidation, I will cut instantly. That single habit has saved me multi-six figures in drawdowns over the years. You have to predefine your thesis. So each position has a thesis, what I expect to happen, what should happen, and what disproves it. Without that framework, conviction turns into bag holding to zero, and I don't ever do this. You have to exit when your thesis completes. So I exit once my scenario is played out. So let's say that I buy a coin on BNB, and I'm expecting it to be on crypto Twitter everywhere. Maybe I'm expecting a few KOLs to talk about it, and that will kind of mark the top. If this plays out, I will exit once they tweet. That's how I do it. I'll give you a good example. For Toshi, I exited a lot of my portfolio when they got listed on Coinbase, and that was my thesis. And that doesn't mean that I marked the top. I sold the top. Actually, I missed a fair few gains because I sold a little bit too early, but I stuck to my thesis, and this is what's important, okay? And also no improvisation mid-trade. The moment I start rewiring my plan during the trade, I've already lost. I always stick to my plan no matter what. That is key. You cannot be improvising mid-trade. This is the mistake most traders make. You have to stick to your plan. And before sticking to a plan, you have to make a plan, okay? Rotations and reality. Most coins go to zero. Guys, all shit coins go to zero. Literally every single one. Every rotation ends in meme coins going down a lot. Coins that printed a 50x vanish. People convince themselves this time it's different. It never is. The faster the rise, the faster the fall. BNB season, very recently. Abstract season. Solana meme coin season. All these coins have gone down at least 80, 90, 95, 99%. They've all gone down a lot. I've lived this enough times to know that you either exit on your term or the market exits your portfolio. You have to take profits. Take the profits into stables and be ready for the next rotation. Liquidity rotations. The altcoin market doesn't even move together anymore. Like I said, it's like fragmented, right? 1 week it's BNB season, the next is Solana, the next is base or abstract. So part of my edge and my informational edge with my groups is I can anticipate what the next flow is going to be. Through my tracking of the inflows, which I showed you earlier, I can anticipate it. And rotations are just opportunity wrapped in timing. So they punish the hesitant and reward anticipation and decisive action. The extraction layer. Every narrative in rotation, no matter how bullish, is just a battlefield of extraction. This is very important to understand as a trader. Teams, KOLs, and insiders, they're not trading belief. They're trading liquidity. When a rotation gets loud, it's probably already crowded. So it's a good idea to study on-chain flows so that you can actually see where liquidity is moving to. If you've seen a lot of liquidity flow into a chain recently, these inflows aren't going to last forever, guys. Like, there's only so many inflows that can actually enter into an ecosystem. And once that's exhausted, that will mark the top of that season, and you probably want to get your money out. So it's as if like trying to time the top of a season inside a larger crypto cycle. This is why it's hard. This is why most people fuck it up. But this is why it's profitable, because most people can't do this. Another thing that's funny is that you should ignore team promises. Devs always sound the most confident at the top. They believe in their own optimism because they're used to living inside it. But honestly, I've learned that the most confident teams, they're most confident at the very top. So when teams give all these large promises, we're going to get listed on Binance, we're going to do this, we're going to do this. This is often at the top of the coin, price-wise, or just after the top. You've got to learn to ignore it, because the teams often buy their own bullshit, and they will burn you if you believe what they're saying. And the last thing, which is incredibly important, I really need you guys to internalize this, is that time in the markets equals risk. For crypto alts in particular, it really is true, because every hour you're in a trade, you invite more risk. Smart money rotating in, narratives dying, devs rugging. Especially in this fragmented new market, you shouldn't be holding for long anymore. That strategy is mostly dead and only reserved for the top few coins. So this is the this is the little flywheel here. We got Solana to abstract, meme coins, DeFi, BNB. You can just see like it just goes around like this. Once you guys understand this, it's a lot easier. Solana season, milk it, USDC or USDT, stable it up. Next, abstract season, milk it, next. Meme coins, next. DeFi, next. If you can anticipate it and you're in the right groups, you'll make a shitload of money, I promise you. Protecting profits, re-entries and asymmetry. I don't enter old winners, guys. Profits are scarce. Once I've made profit from a coin, I try my best not to enter that coin or trade straight away. The urge to go back is always emotional because the charts feel safe. They feel safe. They've rewarded me in the past. It's just a mental bias, okay? But really, they're the most dangerous of all. I've seen traders give back months of gains trying to recreate an old high. When I exit, that story ends. If the coin is truly revived, I'll catch it later. I'd rather miss the coin, re-enter it. Honestly, guys, it's not a good idea. Asymmetry only. I don't hunt trades. I let them come to me, and I filter them through the lens of my pattern recognition. I want the downside tightly capped and the upside to be really big. And that asymmetry is what I look for. Anything other than that is genuinely wasted attention, in my opinion. This approach means that I often don't see setups for a while, but that's fine. Or sometimes I do see setups a lot if a season's really, really hot. Really just depends. But it also means when I pull the trigger, I'm loading from conviction, not hope. It means that I avoid losing money from subpar setups. Capital is your ammo. Like I said before, most people don't like holding stables for some reason, but they're power, because every dollar I protect near the top of the cycle or of a narrative is worth 10 when I redeploy it in another meta. I move stables. When I move into stables, I'm not running away. I'm setting up for the next rotation, and I implore you guys to do this. It's what we spoke about here, the cycle moving around. Okay? Solana, stables. Abstract, extract, stables. Meme coins, extract, stables. That should be your play. Okay? Psychological traps and desk discipline. Desk discipline. If I'm not at my desk, I don't trade. Most phone trades I've ever taken have lost me money. I've got data on this. So this is from my own experience. It might be different to you, but maybe you should take what I'm saying into account, because I've had literally hundreds of trades of data. I've seen that it just doesn't make me money. And the reason why is because I need to be present to manage my positions. I manage my positions very tightly. So if I'm out and not at my desk, I'm less likely to manage a trade properly, and therefore I'm more likely to lose it. I treat it like a job, like I said before. If you want to make serious money from trenching, you have to treat it like a job. Okay? It's not a side hustle. If I treated it casually, I would lose money. So I structure my day like a professional trader. I have sessions, focus windows, and logs. You have to in order to make serious money. The emotion loop. Fear and greed cycle endlessly. You have to learn how to deal with this. One drives you to sell too early, the other to hold too long. And like I said before, I try my best to put rules in place. I call these guardrails. Like I mentioned before, I have entry rules, exit rules. I have management rules. Emotions will always exist, but discipline converts volatility into structure, and that will make you far more money in the long term. And the last thing is that boredom is genuinely an edge. Some days I will look at the market. Like today, actually. I'm recording this on the 11th of October. There was a massive crash last night. I'm looking at the market right now. On-chain is dead. And I'm just thinking to myself, I'm not going to trade today. There's no edge. You need to know when to sit on your hands. I'm going to make more money, or I'm going to lose less money by just going on a walk today, enjoying the sun, instead of trying to chase trades that aren't there. Okay? Summary. So you have to operate like a professional, guys. Trading isn't a side hustle, especially in the trenches. It's a real job. I make serious money from it, so you've got to treat it seriously. You need structure, systems, and focus. The guys who treat it like this win. They track everything. They review their trades. They get sharper over time. They're glued to their screens 24/7. They protect their capital. Your job first is to survive. Every trade starts with new risk. So how much you're sizing, where you're wrong, when you're out. Your capital is your ammo. Waste it and the game is over. Follow the flow. Don't fight the market. Follow where the liquidity is going. Ride it. 1 week it's BNB, 1 week it's Solana memes. Start with BNB, stable up, turn that into Solana, stable up, move that into abstract. That's the game. Keep your emotions out of it. Everyone feels emotions. The difference is whether you act on it. You don't have to act on your emotions. And the last thing is just stay in the game, guys. Improve every single day. Hang around long enough. Network. Stay in the game. Don't blow up. Manage your risk. And you're going to make it. And I hope to see you one day in one of the groups, Simon. Catch you guys later. Bye-bye.